www.patentinvestmentproperties.com. Call or text us. 786-454-2888. It takes careful planning to provide for your income in retirement, and real estate investments offer fantastic tax benefits to investors. These laws exist to encourage investments in the real estate market through incentives. Missed opportunities to keep more of your income can add up over time, and knowing what you can write off the taxes on your Florida investment property can help guide your decisions and increase your profits over the long term. But, of course, real estate investing is a business, so you should treat it as such. In addition, each of these laws has qualifiers and complex nuances, so it is always recommended you work with a tax advisor to help. If you would like to avoid missing out on your allowable deductions and be more prepared for meeting with a tax professional, watch more about what you can write off of the taxes on your Florida investment property. Passive or non-passive. It's essential to consider the differences between passive and non-passive real estate investment income and how tax law treats each. You can further benefit from these tax laws if you are not a material participant in your real estate investment business. In other words, as a passive investor, you can write off the taxes on your Florida investment property through passive losses on your passive income. Write-offs. If it has to do with your investment properties and isn't an improvement, but a necessary part of maintaining, managing, or the expenses you may incur for operations in your portfolio, these are all areas of allowable deductions for real estate investors on your Florida investment property. Depreciation. One of the most considerable allowances to lower your taxes on your Florida investment property is through depreciation. While depreciation involves no cash flow, it allows for a deduction from the taxable income based on gradual deductions. Each real estate investment asset class falls under different timelines. The land is always in the process of appreciating, so depreciation is only for improvements. Pass-through deduction. You should also be aware that you can write off the taxes on your Florida investment property through the pass-through deduction, or the Section 199A Qualified Business Income (QBI) deduction is in effect until the end of 2025 and allows for a 20% deduction on income from rentals on qualifying properties. Capital gains. You should also know how capital gains can affect the taxes on your Florida investment property. Maximizing your deductions requires understanding the difference between short and long-term capital gains and how to strategize to make the most of this benefit. Incentive programs. You should also be aware that you can write off the taxes on your Florida investment property through 1031 exchanges and invest in opportunity zones. In addition, you may defer the profits on selling a property with a 1031 exchange until you sell the following property. Unless you decide to reinvest, you can continue deferring the profits. However, with a qualified opportunity zone fund, you may defer until the property sells or on December 31, 2026, whichever comes first. Special loss allowance. You should also be aware that through the special loss allowance, you can write off up to $25,000 of the taxes on passive income for your Florida investment property for qualifying individuals.
John Patton with Patton Investment Properties. Thank you for watching the video. Our numbers here on the screen. Let us help you find your next investment property, okay? And have a great week. Bye-bye now.